Okay, so this is the fourth of our series um, about prop trading. This is also an AMA, this episode. This series is called Making the Turn, and it's about following a gentleman called Earl E. Bird through getting a real prop job, a professional prop job, and all the way through to becoming a senior trader today. So this is Making the Turn, episode 4. We're going to spend a few minutes giving you an update on Earl, and then we're going to get into your questions that were pre-submitted. If you do have a question, we invite you to put it in the Q&A panel, not in chat. Just hit us in the Q&A panel, and we will queue it up and answer it. With me today here is John. John is the head trader at Convergent Trading. John's got long time experience trading, and we do things together at Convergent. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So the series, Making a Turn from New Hire to Senior Trader, episode 1, which happened a long time ago, about 4 months ago or 3 months ago, was what does making the turn mean and look like as a new hire? Then this is, our new hire being qualifying for a trainee position. Episode 2, the Earl gets in and is now a trainee. What must we do to make the turn happen? You could see the link to that second episode, and JC here will drop it for you in chat. If you want to click on it and go watch those episodes, I think you'll pick up a few things between Earl's experience and the AMA. Episode 3 was the junior trader. Okay, we've made the cut. How do we now develop as a trader? Episode 3 with the associated link. And then today is episode 4. You're moved into being a senior trader with the firm. How do we manage consistency and growth? Okay. So a quick recap for those who are new. What Earl's process has been. So let's just follow Earl's Early Bird's journey. Where we left in the past, episode 1, Earl tried out for a professional prop trading position and made the cut, barely. On episode 2, Earl was taken in as a trainee and put together his risk and trading plan, got those approved by the risk manager and the head of the trade desk. His job was to focus on following the process that he had written out and committing to internalizing it. Episode 3, Earl has become more mechanical about his trading. Essentially, he's reaching the third stage of competence. He's seeing some flashes of genius, but in general, he's just following the process and is settled into what he needs to do daily. So it's about process. I could sit here and talk about indicators that work, software that works, and so on. But at the end of the day, it is about process. What is your process as a trader? That's not talked about enough. And the process includes everything from defining what the overarching risk plan is, your daily loss limit, weekly loss limit, risk per trade, the margin requirements, the rotations, how you're going to manage the trade sizing, your R factor, how much gain do you have to have per unit of risk in order to come out ahead over time, and so on and so forth. And then you break that plan into, here's the market I'm looking to trade, these are the hours I'm looking to trade, here's the theoretical basis of my trades, and then here are the setups, the actual setups where I will trigger the trade in line with my bias and plan. That's the process. And the goal in stage 2 is internalizing it. Stage 3, it becomes this thing that you do consciously, like learning to walk one pick up a foot one after the other and put them in front of each other so you can walk. And then the last stage, of course, is you're there. Now the challenge becomes of how do we make ourselves uncomfortable. Stage 3 or episode 3, we have a process. We know what it is. How do we make ourselves uncomfortable? Meaning, how do we expand our band? So on episode 3, has become more mechanical. He's seeing some flashes of genius and so on. At this level, he's following the process and settled into what needs to be done daily. Earl's focus was on maintaining stringent risk controls while growing his size. His clip size presented some new challenges, but the process is the same. Discipline is key at this level. At the level of, oh, yeah, sorry. I'm actually using the wrong panel. Thank you for that. Boop, boop. At this level, discipline is key. It's about sticking to the process, right? In today's update, Earl has to push forward with identifying when the best opportunities show up. So you want to make sure you have your A setups, because that's where we're going to size up. Sizing up when those opportunities are traded, and preserving bullets and being patient for when the market actually shows the pieces that are needed in order to click. Just so easy to kind of invent trades or think you're seeing trades. Everything looks like trade. In fact, I fell into that trap, and it's hard to avoid it. I fell into that trap last Friday. We had our last day of the execution lab, and there was so much chop in the ES that I started to see trades where there are none. So this is a process that you have to keep kind of working on. I've got 25 years experience and I'm still making those mistakes. He now has to solidify his skills by offering support and some mentoring to trainees. You don't really gel everything you do until you have to teach it. He has to stand behind and be able to articulate what he's doing. If you cannot explain it in simple terms, then you don't understand it. He now not only has to size up, he also may need to start preparing for monitoring and executing in a set of different markets and approaches or setups. You know, when you start becoming consistent, you start sizing up, those same opportunities will exist in crude, NQ, RTY, FDAX, whatever. There are many, many products. And some days are good for some products and they're not so good for others. It is key for Earl to not get ahead of himself. It is very easy to mistake controlled growth in our skills with favorable market conditions, which is always a battle. Like, you have an exceptional month and all of a sudden you think, I've got this cracked, it's easy, boom, I'm good. I don't, I'm an expert, when we know that there is no such thing as being an expert trader. It's technically not possible. So favorable market conditions tend to kind of throw us off, because things work when they shouldn't, right? Because the market's just throwing opportunities at us more than it normally would, so we can cover up our mistakes. So Earl has now seen enough trades and enough market situations to be in a position where to identify the very best and the very worst conditions for his trading plan and setup. So this is what you have to deal with at this level, these kinds of details. So he has to identify the very best and the very worst conditions for his trading plan and setups. You need to know what that is. You need to identify it. He doesn't trade when he doesn't have the right pieces in place, period. Just because he's sitting in a prop shop and people are clicking around him, he should not be trading unless he has the right conditions. The key battleground consists of, right now for Earl at this level, consists of risk control versus the size of rewards. Don't take a risk if you don't have an outsized reward. Being quick to return to center when a streak of losses happen. The last trade has no relationship with the next trade. You got to let it go. Emotions are not something we can shut off or control. What we do is we recognize what they are, and our objective as professional traders is to immediately go back. Um, think of a professional actor, right? You're in this blockbuster movie. Maybe you're going through some relationship upheaval, some PR issues, a divorce. But when you show up on set, you should know your lines. There's a lot of money at stake with all the crews, the lighting, the set, all that stuff. As a professional performer, you just show up and you are just doing your job. That's the level you want to be at. You want to get back to center and focus on the here and now and leave the rest of the world behind when you're trading as quickly as possible. You have to be able to detect quickly when when market conditions aren't favorable. We use things like opening type. We look at what kind of relationship the current market has with its what we call DGPs, or um, day generated prices. What's the relationship between the open and the prior session, where we are versus the open today, where we are versus uh, the overnight levels, overnight VPOC, VWAP, where we are versus the opening swing. These are things that help us detect the market conditions we're in. Are we in balance? Are we out of balance? We want to detect that as quickly as possible. Detecting quickly when he isn't in a top state for trading, and to stop or take breaks. Hey, I'm not performing. I'm not seeing it today. I've got to be able to see that before I hit my down limit for the day. So you need to be able to be very quick to just stand back and say, whoa, slow down. There's there are a lot of hours in a day, and I want to make sure that I still have opportunities for when the market actually breaks later. And then on the flip side, that's the defensive side. On the offensive side, we want to press our edge. If the market, if we're reading the market properly and the market is paying, we want to squeeze those runners. We want to be aggressive with our next trades and so on and so forth. So when the conditions are favorable, which is not very often, we want to press. We've now outlined what we know to be a common path for professional prop traders. We've outlined how a trader can go from a trainee to a senior trader. For those outside of the industry, we feel like there just isn't a very good framework out there for what it takes, right? What does it take to do this professionally? It's not a function of getting a brokerage account, getting a charting package, getting the lowest margin, and then just clicking away. And hey, you've been lucky in other parts of your life, so you'll be lucky here. I hate to say it to you, but that stuff doesn't work. So we're showing you that trading is a professional thing. You go from 0 to 100. Um, there isn't like unless you're on a simulator, there isn't like, hey, I just got started. This is kind of a game for what. No, you're going in there and you're going up against professionals who've been doing it for decades, fund managers, banks, HFT firms, spreaders, all these things. So you need to bring your A game to it. So when you're outside the industry, there's a lot of people get lost in the marketing and the idea. They're kind of seeing the tip of the iceberg, but everything underneath the water needs to be in place. The foundation needs to be in place in order for that tip to actually show up. So if you're self-funded or trading on a retail basis, you don't get to see all the work that's happening underneath. And it is required of everybody in order to do this. I've backed quite a few traders. I'm going to tell you that every single one of them in the interview has tried to impress upon me and the other reviewers how different they're going to be than everybody else ahead of them, how they will never break their rules, how they'll always follow the plan, how they will whatever. They're special. Everybody's special. But then you put them in front of a live account, you drop 25 grand into a live account, you give them their limits, you give them their login, and they all just behave the same. They all ultimately can justify poor decisions and falling out of their plan. You now have a point of reference. You might want to emulate this process. We expect you to go through the same process. Now, I want to finish with this. Convergent, what do? Convergent helps provide a parallel to this process through our accelerator program. So we've taken all of that experience, the stuff we do with prop traders, and we've made it available through the accelerator program. And so all the pieces that a prop trader would have to go through in order to be prepared with the right background, the necessary priorities, and then the skills and exercises needed to work through it for yourself as a unique individual. We follow this up with a week of live prep and execution and workshops to go through the details. That's really what our focus is right now. So those of you who haven't heard, Convergent has changed its membership structure. We've got new memberships. We've dropped prices. We have what is called a tools tier that gives you access to the professional news squawk, the market stats report, the harmonic rotations, the Discord channel, which anybody has. So these are already in place. The cost is about half of what it was before. And then existing members after June 16th will renew on the new membership. What's next for you after this episode 4? Before we get to the AMA, is that if anyone wants to explore or learn about the convergent trading approach, which is based on market auction, the market auction is key. Then we layer on, we look at, price action based trading, order flow based trading. We throw in a healthy dose of historical market stats to work our edge, to look for our edge, or to define or explain market action. And then we basically put all of that together in what is our trading plan, including the actual setups that we use to enter the market and so on. To learn more about the accelerator program, just point your browser to go2ct.pro/accelerator, accelerator 2025. For me personally, my objective is to create a group of traders who've been through the program and who can speak the same language, who can support each other, rather than folks who are just kind of learning stuff willy-nilly from YouTube, which you can learn a lot from YouTube, but there are hundreds of thousands of videos and thousands of approaches, and it's just an incredible waste of time, in my opinion. I've been looking at what's out there in the retail market for the last 25 years, or not 25, 17 years. I'm going to tell you, there's just so much stuff that it's really hard to know who you should listen to, what you should listen to, what really works, and so forth. We're different in that. We're all coming from a prop environment, and this is real, right? It's curated, it's real. Everybody can learn to cook following YouTube, but wouldn't it be much more time saving, which is worth a lot of money, to learn from somebody who's a professional chef? That's the kind of approach that we have. We've also made it the self-study accelerator course phase of the program. So there's 5 weeks of this self-study with coaching sessions every week through those live coaching sessions with John and I. We've made the self-study part available. It's a lot lower cost, and there's a discount through June 2025. To get information on that, you can go to go2ct.pro/accelerator-course. All right. So any questions about that, hit us up. JC, do we have anything on that so we can move on to the AMA?
We have one question, but maybe it's better to take it offline because not really related to anything in the PPT.
Very cool. Okay, so let's move on. If you have a question about trading or anything we're talking about, please type it in the question and answer panel. We'll hit it up before we leave. Here's our first question, John. I'm going to throw this at you. I've been trading for 5 years now. The last 6 months, I've been fortunate to get my foot in the door at an actual prop shop. Hey, those still exist. I've been on the sim for 6 months and I'm doing good, but I have a sense of disbelief in myself or imposter syndrome that is happening. I'm trading with such freedom since I'm on the sim. When I go live, will I be able to repeat these results and trade with such freedom, lack of fear? Is the question I constantly ask myself. How do I go about finding a process and at the same time being a discretionary trader who uses instinct to navigate the markets? Oof. Hope that makes sense. Love this series. Thanks for doing it and trying to help the community. What do you think, John?
Well, to respond to the question, he says, when I go live, will I be able to repeat these results and trade with such freedom and lack of fear? And, my answer is it's really unlikely that you'll be able to, probably almost certainly not. I would bet heavily that you won't be able to. And that's just because from what I'm reading here, and I could be wrong, but it doesn't seem like there's a system or like a trading plan. This person seems to be mostly trading instinctively on sim. And the thing is, there's questions that pop up like this a lot. Like, someone kind of just gets a sim account, they start trading around, they do kind of well, they feel like they kind of have a knack for it or they a gut feeling. But then, when the stakes, when you go to a live account or the stakes go up for one reason or another, all of a sudden that edge disappears. And it's because what's happening, you know, there is something called intuition in experts. And we talk in the accelerator program about how you cannot become an expert in trading technically. However, you can become a professional and you can, get a lot of knowledge and experience in trading. And I do believe that intuition does matter quite a bit in trading, but it is not, in my opinion, a substitute for a system. Intuition in experts is something that's studied. It happens within the context of a known environment. And so when I think about how it appears in trading, how intuition appears for me, it happens within a system. You learn a system and you have a set of rules, and there's discretion within that system, meaning that you have the discretion whether to execute or not because you have to make the subjective decision. Is the pattern I see on the screen a setup? Is it happening in a place I plan to trade? Is my bias congruent with taking a risk here? These are the things you have to ask yourself. And those are the things that get chunked when you've done it a whole bunch. And chunking is a big part of where intuition comes from. Also, a lot of the intuition that you get is this sudden idea. Oh my goodness, we're going to break lower. It looks like we were rallying all day, but now I just know we're going to break lower. You don't know where it comes from. Well, that intuition, again, it comes from like a lot of experience of doing something within a system, paring down irrelevant information, and then just seeing the same things over and over again in a very familiar way. So the big point of what I'm saying here, intuition is not a trading system, and it is not sufficient unto itself to trade. You need a system and process. And when you put the time in with a system and process, what generally tends to happen is intuition starts to fill in the gaps, and you go from, losing a little bit to being even to all of a sudden, FT has seen this transition so many times, losing a little bit to breaking even to kind of pushing higher to all of a sudden exponential growth in an account. And that's when the intuition starts to really take off, and that freedom that you feel starts all of a sudden to happen with a real account. But the key to it all, it has to happen within the context of a system and a process. And when you have a lot of repetitions within a system and process, then you start to build that intuition and things start to come a little bit easier. That's what I think about FT. What do you think?
You said a lot there. I think that's correct. The main issue I have, the main issue I have here with what you're saying is you're counting on luck. It's people conflate being a discretionary trader with some sort of randomness. Like I feel like I should be long. If that's how you're trading, it's really hard to maintain that edge, because how you feel has some sense of intuition to it, because that's how, stage 4 of competence works. But stage 4 of competence also means that they went through stage 2 and 3, where they've just taken solid, clear, written steps and have internalized them enough that they seem like intuition, but they're not. Kind of like knowing when to let go of a bow, when you're aiming at a target. Like you've done it enough to know you can't explain it, but you can do it. So I would say that your job on the simulator for the last 6 months has been to establish a record based on repeatable steps. And you don't have to be complicated here. Just define what the market condition is, define what the bias is, and then define, okay, I'm going to look for this particular structure in order to get in. And then that way you can track the performance of that and prove to yourself and know that it'll work. When you're in a simulator, that thing you call intuition, it just goes right out the window. The instinct goes out of the window because because fear starts to engage a part of your brain that's not very intuitive and doesn't think very clearly under those conditions. So feeling like an imposter, by the way, is just part of being a trader or being a performer. You always feel like, was that luck or did I, but being in a feeling like getting imposter syndrome, the market will consistently test that. Was I just lucky these years, or is this my own performance? And I think you need to just really put that in on paper. If you don't have a plan on paper, you would never be backed by me. Earl E Bird had to get his plan approved, so should you. We took long on that one. We'll speed it up. On days like today, is there a point you just say, I missed it, or do you continue to look for pullbacks, zippers, or a crazy 8-ball to decide to get in? I'm typing this at 12:10. What do you think?
Well, I'm gonna guess she was talking maybe about the S&Ps yesterday. I would guess that's what it is.
Yeah, this rally here.
Yeah. So here's the thing. Good, really good question. I don't know if this is the Beverly that went through the AP, but for me, if or an AP grad who's looking to trade this, you know, we had an open reject reverse opening type, which yields no edge. And then pushing through that, we really didn't have any opportunity to get on board that was a setup for me until we got to the IB. The IB for me was tradable. I mentioned this in the AP. I could see where a lot of people wouldn't want to trade an IB in that situation. For me, it was tradable. That's where I was able to get on board. But just more generally speaking, if you're an AP grad and you're saying, hey, how can I trade a trend day? Well, thinking about it first, if you identify the opening type, the first potential idea, which may or may not be in your repertoire, is an opening swing or an opening range breakout or retest. I don't really like to trade those. A lot of people don't. So we're probably going to miss those. So that's gone. Then all of a sudden you have the first hour's worth of trading. Well, if the market's directional and you're looking to get on board, I'm looking for pullbacks to day generated prices. We didn't get one. So what happens? The next thing is the IB. The IB happens. Once the IB is broken, if I'm not on board for it, then I'm definitely looking for the first pullback to day generated prices after the IB break. That's probably my best trade. We didn't get that either yesterday. I will occasionally trade an IB extension, which we did get, but I won't. If that's not in your repertoire, then I wouldn't blame you. And then beyond that, you can look for zone to zone trades in the direction of the trend if that's in your repertoire. However, if you're like an AP grad and you are my trader and you just went through that, you came to me at the end of the day, you're like, John, what should I do differently here? I didn't get on board. I didn't trade the opening swing breakout because I don't trade those. I didn't trade a pullback to DGPs within the IB because one didn't exist. I didn't trade the IB extension because I didn't like it and that's not really my thing. And then we didn't get the first pullback to day generated prices. If you went through that list and you said I didn't have a setup, I'd be like, oh, well, you didn't get one today. Because that's every bit of edge that I would see in that I think is legit for someone that trades that method. And there wasn't really a great setup. That happens sometimes. You know, you look at the
Right.
very next day, we have a beautiful pullback to day generated prices that twice yielded a great winner. So, you know, you didn't get one that day, but if you trade the same system, you got two to the next day. So that's the nature of this game.
Right. And also remember that historically speaking, days like yesterday, well, without this crazy tweeting nonsense and the constant change in the rules by our wonderful government, uh, historically speaking, the ES has these kinds of days, 18 to 22% historically of all days, looking back 10 years. So these are those that day would not have been a good day for me, or it's not my kind of day. I don't like these days that run. For others, you know, momentum traders, they love those days. That's what they live for. But to me, I generally don't participate those days, and you just have to avoid having FOMO on those types of days. Stay put, stay in your seat, look for pullbacks, look for failures, you know, in this case, our short squeeze setup or something like that in the direction of the trend. But if they don't show up for you, it's just a day where you did your job. You know, you waited for your setups, you didn't anticipate, and it just didn't happen. This is from Julian. I have plans for joining the accelerator program for Q4. The only issue is I work in the day, except for one day of the trading week. Can what we learn also be helpful in the overnight Globex session? Since we'll be working during the day mostly, I want to know, can I find an edge in that time? So I'll answer that. Um, I'll answer that. It's if you're trading corn or soybeans or the Bund or the DAX or the Euro stocks or the Kospi or the Hang Seng, our process is the same. It's based on an auction in an orderly market. So you can apply it to anything, stocks, CFDs, whatever. It's the same process. So what you have to do is then focus your attention on the time period that you can trade in the market that you can trade. Would I trade, you know, in the middle of the night? Would I trade the NASDAQ using this method? No, I would probably choose an active market. I would go to an active market, meaning Europe or something like that, which you should have access to. So you do have many opportunities. I want to remind you, though, while you're going through the accelerator program, especially the live trading week where John and I are sharing our screen and we're going through the prep, we're going through the execution, you're seeing the execution on the screen, we ask that you take that time off. It's, you know, 3-hour session in the morning, a 2-hour session in the afternoon for the workshops that week to maximize your learning or to maximize your participation, because you can ask us and talk to us while we're live and trading the markets. You should be off and you should be in the accelerator program at that point. Second part, and does Edge Pro X offer a great replay setup for us to review the day's session with MBO data? Absolutely. You can replay whatever. You could choose tick data and replay the day just like it happened. Lastly, what should I be doing until it's time for the accelerator program begins to help speed up my learning curve? I don't know what you can do to help speed up your learning curve. I would say the biggest thing is to conserve capital, because we want you to have that money to trade with after you're done with the accelerator program, rather than trading it possibly without a plan, possibly without understanding risk or trading psychology, which we go over. I would want you to probably be on a simulator or something like that. There's not much you can do to prep because we go through it. Currently, I'm not a convergent trader, and I don't have a trading platform with MBO, but I want to get Edge Pro X so I can hit the ground running once the program starts. Yeah, I mean, when it's time, hit us up. We'll be happy to set you up with everything you need. What importance do you give for market profile, time price, opportunity, and details while analyzing and intraday trading ES futures? From Chris. John, how much importance do you give to market profile, TPOs, for intraday trading?
I would say it's probably the chart that I look at more than any other chart, to be honest with you. Like just because it's included in my prep and it's one of the 3 charts that I look at intraday, similar to you. So during the day, it's really the chart where the trading ideas come from, and the bias comes from, and then the trigger chart is where the entries come from. So what importance do I give it? I guess it's hard to say that the daily isn't the most important chart just because that's where all my plans come from. But maybe the 30-minute market profile TPO chart actually probably is the most important just because I use it for so much. It's instrumental in planning as well as in execution. So I guess I never thought about it. It's my most important chart, to be honest with you.
Very cool. I would agree with your sentiment exactly. I mean, this chart is really key in developing a bias, right? So once we have our TPO chart, we can see, like, look at today. I mean, it was a B-shaped. It's a B-shaped profile pretty much most of the day, and it extends down into the close, making it more symmetrical. So what we have is basically a market that has pushed up, squeezed through the prior high, which was a trend day up with a P-shaped, with a P-shaped profile, which is pretty aggressive, right? We've moved value up, so we expect value to remain up here in the 5930s. Took out the high in the first bracket and ended up at the low. So we're back to where the structure is weak for the S&P. So my expectation is the overnight session here, the market closes in about 7 minutes. My expectation is the overnight session is likely to continue to explore lower. The catch here, you can see it back in balance here. The catch here is we're in the middle of earnings, so that's going to throw a wrench in things. But barring any outside influences, the TPO chart is telling me that things kind of finished weak given how we ended up yesterday. Like we closed down in the stem versus somewhere in accepted prices. We did make a higher high, higher low. How did value move today? Can anybody answer? Look at this chart. We're not going to go through the accelerator program right now. I feel like I am. But how did value do today? Tell me. We have a higher low, higher high. Price action shows trend up. How did value do today? Come on, I'm sure you can answer.
Oh, we got a good answer. All right, pretty quickly from someone that didn't do the program.
Mm-hmm. It did. We had compression, right? We had a smaller kind of, but we don't want to pay attention to value on a trending day because there is no value on trend. What I'm looking for here is that value moved down slightly or is actually pretty much in line. So despite the price action moving higher with the higher high, higher low, value didn't move up. The market's about value. Yes, price action is something you see on a candlestick chart, but it's really a profile chart. And we have volume as well as TPO on this chart, the gray is volume. And you can see the volume profile shows the VPOC moving down. So the market tested up and it could not bring value up. It's very likely to get stuck here or explore in the other direction. Okay. So it has a pretty, back to Chris, the TPO chart's pretty important. I have this is Mike. I have a question regarding time of trade. Do you usually wait for initial balance to form before taking a trade? And what if prices are at your level of interest and IB is not yet formed? Do you execute your trade? John, what do? Do you wait for the IB to get done? The IB, for everybody, the initial balance is the first hour of RTH trading. So everything from 8:30 to 9:30 Central, the high and the low of that first hour is what's called the initial balance. Go ahead, John.
No, I'll definitely trade before I'll trade, before the cash open at times. I like to execute between 6 a.m. and 8 a.m. And so before the initial balance is in, certainly I'll trade. In fact, a lot of times the initial balance stat, the breaking of the IB, it's a huge stat. And I mean, any day I get opportunity, I like to be on board a trade that targets the breaking of the initial balance, which I think that's the most common trade that I got on in the accelerator programs during our lab week. Is that's a big edge, waiting for the the overnight stat to happen, the IB stat to happen, and then once you have those two stats, you kind of that's as much of the of you have a lot of the day has kind of shown itself, so it really pairs down what further opportunities may happen. But so short answer, yeah, definitely. I definitely trade before the IB without a doubt, no doubt.
Yeah, same here. I'm not constrained by the IB. Generally, I recommend those people who are learning or aren't consistent to wait at least the first 20 minutes of the RTH to trade. Let the market on open, the day type or the higher time frame get their business done, because it can really run at that time. Let them get done, and then look at where we are versus, where did we open versus the prior auction, where are we versus the opening swing, where are we versus the overnight auction, and so on, and then form your bias, and then wait for your setups and then execute mechanically when the setups come in. And in general, for most people, that doesn't happen for the first 15 or so minutes, but a lot of trades show up before the IB is done, and a lot of like John said, one of the setups is looking for the IB. Arthur, former and future convergent member here. When I'm watching Delta at high volume nodes, it's often the case that from the point of highest volume and above is majority buyers, and below the point of highest volume is majority sellers. I would normally expect that to be the opposite, i.e. buyers coming in on the low side looking for value and sellers on the high side. Is there anything you could say about this? I've included a blurry photo from this morning that just happened to be setting up while I was writing the question. John, do you understand what he's asking for here?
Yeah, I think so. Well, first of all, I think he's misspeaking, but the volume, there's all buyer and seller at every transaction. So it's not like there's buyers above here and there's sellers above here. Every transaction is a buyer and seller. What I think he's talking about is the upper half of that distribution is mostly positive delta. And sometimes there's this thinking out there that positive cumulative delta is definitely a directional thing, and it's not. It's just it just means that those transactions went off on the offer rather than going off on the bid. Does that mean the buyer is more aggressive? That's what we interpret it to mean. But you have to think here just in common sense terms. What does that mean? That means that those prices above, there were a lot of people willing to post offers, a lot of people willing to post offers to sell something, and there were less people willing to lift those offers. So, in finding balance, the price is above the last traded price. It's not uncommon to find people that were willing to post offers and sell at a certain price, but not enough buyers to actually lift those offers. So it's not uncommon to see in a balanced area. It's not uncommon to see the opposite either. Delta can do whatever it wants, but it's not uncommon to see in a balanced area that the upper end of that balance is mostly offers being posted, which is effectively resistance, and buyers lifting into them but not moving the price. That's something that you commonly see, and it's just something you have to understand that delta is not inherently directional. It's just telling you where the transaction went off. Does it say something? What it mostly is telling you is who's more aggressive, who's more impatient. That's what delta is telling you, and that can become a directional indicator in certain contexts, you know.
Yeah.
But so that's a simple answer. Is most of those orders just went off on the offer, which is to be expected at the upper end of balance.
Yeah, I mean, you're someone who sells a product. What are you looking for? You're looking for higher prices, right? You want to sell your product at higher prices. So unless you're being an aggressor, in which case delta would be negative because you're hitting the bid, causing a negative set of contracts to be counted, and that's how delta, for everybody, the cumulative delta is simply the sum of all the volume that upticked the market minus the sum of all the volume that downticked the market. It's a volume-based indicator. So delta is measuring the aggressor only, right? However, price and the profile is measuring is looking at where the market traded, at which price and how much, which price and how much. Whereas a volume bar at the bottom is just telling you how much volume traded at a certain time. It's not telling you anything about price. And so this is why we favor the profile, because it's telling us how much of something the market is willing to trade or how much of something the market is rejecting. There's no volume where prices are being rejected. But what John covered here is exactly right. If I believe that these prices, 59.30, let's say, is really a great price for me to unload my inventory, then what am I going to do? I'm going to wait for the buyers to come in. I'm going to offer a bunch and I'm going to let them nibble. That gives you a positive delta. Then they're going to get done. And then I'm going to let price move up a little bit because they got done. There's demand. I'm going to let price move up a bit, and then I'm going to post another offer, another 1,000 contracts, 2,000 contracts. Let them nibble on it, right? Let the buyers nibble on it. What's that doing? It's giving you a positive delta. An aggressor is coming and filling it in. But what's really happening? It's selling. It bends people's minds how the auction works, but that's what's going on. So if I have a high volume node and I've got a positive delta, that's a seller winning that battle. Because if there wasn't a seller there, then the delta will be positive, prices would move, there will be no high volume node because there wouldn't be enough to hold prices. But because prices are being held, you get that positive delta into resistance. You get negative delta into support. They're pushing and pushing, but price is not going anywhere. It's because somebody's saying, I'll take those. I'll take those. Yep, those two, right? Reminds me of the scene from Trading Places. Yep, you too. I'll take those two. And that's delta hitting price, and it's not able to break through. That's a short squeeze ready to happen as soon as the sellers are done, then everybody else spits them out and it shoots up. Those are great opportunities. So what you're seeing there is resistance in the making. So positive delta is not, just like John said, is not a directional indication. It's just telling you what's happening from the aggressor only. It's not telling you what's happening on the passive side, which can also hold the market. Russell 843, John FT, what chart or charts do you use to adjust your stock zones every day? What do you do your stock zones on? Oh, you're muted, I think.
Oh, that makes sense. Almost exclusively the 30-minute, to be honest with you. A lot, I will sometimes, like when the volatility was really high, I use nothing but the 30-minute. Sometimes when volatility compresses, I will switch to I will kind of zoom in a bit with a PNF, but really not so much. Stock zones, I want them to be bigger, more meaningful things I can plan off of. A lot of you guys have seen me trade. Intraday, I'll get a little bit more specific just by using EPX to draw a line or a tighter zone. But overall, drawing the stock zones, pretty much almost exclusively using a 30-minute.
Same, yeah. Start and on Sunday when you do the week, Then I look at the weekly, go down to the daily. But for the rest of the week, you're just adjusting what's happening within that day's trading range, and you don't need more than a 30-minute for that. Komar is asking, do professional traders have the mindset of only taking 1 or 2 trades a day, or do they just trade the opportunities according to their playbooks as they show up? What do you think, John?
I guess my answer, I like to compare trading sometimes to fishing. And so I guess my answer is like the same as the answer would be to like a commercial fisherman. You know, if the fish are biting, and that means that the market is moving in such a way that it's tradable to me, it's giving me setups, you know, I have a good bias, my plans are working out, then I will trade to the limits of if it's a fisherman, to the limits of your equipment and your fishing quota. If you're a trader, it's to the limits of basically your emotional capital, to be honest with you. Because even there's a cost even to continually winning in a trading day. It still accrues an emotional, you know, you still wear yourself down from all that focus concentration, and you need a break. But that's me. Like that's an experienced trader. Is you're just grabbing onto every opportunity that fits your criteria when those days are available, which in the S&P 500 they happen sometimes. But when you're learning, it pays to be a little bit slower, more deliberate, and be more process oriented. And sometimes that means a more consistent number of trades per day. And ideally, if bringing up traders, I would kind of prefer to see that early on, like maybe 1 trade today, 3 the next day, 2 this day, 5 this day, like 3 to 5 average if they're trading all day. I don't want to see like big aberrations in someone that's new, because I wouldn't expect them to be that good to be able to seize opportunity like that. 6 months, 9 months, 12 months down the road, then I would kind of expect to see some bigger days start to all of a sudden pop up.
Yeah. Yep.
But anyway, for a pro, yeah, like you take the opportunity that you're available. When opportunity shows itself, if you can meet it, you take it. But opportunity has to show up for that to happen. You can't conjure it from nothing.
Yeah. I mean, if there's nothing, but do I come in, unless I'm some sort of a swing trader, which I'm not, do I come in and say, I have 1 trade a day and it better be a good one? No, because
It's too rigid.
I'm flipping the coin once. So I live or die by that 1 or 2 flips. No, I want every time the market is showing me, hey, I'm having, if I have a short bias, or let's say I have a long bias, it's moving up and then it's pulling back and it's having a hard time pulling back against a key reference area. That's another buy. Let it play out, and then you get out, and then it comes back to a key reference area and it's having a hard time pushing. That's another, as long as that shows up, we're going to keep taking it. That's the goal. We're here to follow our process and trade our setups. We're not here to bring some fictitious or external thing like your P&L or how you feel or your instinct into this. You're just objectively focused on trading the markets. I know that doesn't mean anything to many people, but really it's the holy grail. Like just wait for the market to set up, wait for it to show you, define your risk reward, your R factor, define the area you're leaning against and where you might be wrong, put the trade on, let the market do what it's supposed to do. Just don't interfere with it. Easy slope. I'm trading a system that has shown decent results over an extended period. The whole execution starting to feel mechanical. Yay. Easy slope. Wasn't he part of the AP a couple of APs ago? This could be considered, yeah, so I figured. This could be considered good, but I also feel more complacent, not as attentive to the market as before. I worry this may backfire when I need to adapt. Do you recognize this feeling, and how do you balance execution, learning, creative work as professional traders? It's a good question. What do you think?
Well, unfortunately, easy slope, there is no tenure for professional traders.
Yeah.
I'm reminded of a quote from Phil Jackson in The Last Waltz, and I didn't write it down, but it's so perfect for this. Something to the effect, the moment of success means nothing. You have to do it again. And it just talks about how fleeting that is. That being said, easy slope. I love to see this out of an AP grad. You know, you're saying you're starting to feel complacent, or you're worried about feeling complacent. This is what I got to tell you. You need to you need to be working to get better every day. If you're not doing that in trading, then you're falling behind. Now, I'm not telling you to start fiddling with a successful trading system, but I am challenging you that your mindset and your mental game probably are not perfect, because nobody's are. So if you're trading a successful system, what you've carved out for yourself, from all the stuff you've learned, which is wonderful, exactly what you should be doing, and you're starting to see success, don't mess with the system. Mess with, and not mess with, but focus on your mindset. Focus on becoming clearer, you know, minimizing errors, recovering from errors quickly. Check out the webinar I did on the main site about instituting process errors, or process goals, because that would be for where you're at. Instituting some ideas from that webinar would be perfect, like small behavioral changes to kind of just nudge you to where you need to be. That webinar is really for people that are where you're at. It's not for beginners. It's for people that are where you're at, that have a good system, but can start to make the smaller changes now. You've done the big work. Now you're kind of like, well, hey, this is starting to work. What do I do next? And part of that too can come from a feeling of just, maybe there's not that much for you to do now. I remember I had that feeling after initially kind of starting to make the turns, like, how do I get better now? Like, I didn't know. A big part of it is just moving up in size. That's a big part of it. But what I think you should focus on is what I emphasized earlier, which is focus on the mindset. The system works. That's great. I bet you're not I bet your mindset's not perfect, and it won't be until your mind is like a candle flame in a room with no windows, whether you take a stop or have the biggest win of your life. Until your mind is that still, you're not perfect. So work on that. Make that your next goal, until the market starts to show you that, hey, you can learn a little bit more from a technical perspective, and maybe you start to sense that you have another setup that you could solidify. But that's my advice to you, Easy Slope. But well done, congratulations. Love to see it out of an AP grad.
And you can pick up a copy of John's book, Trade Like a Candle.
In a
Trade
room with
like a
no
candle
windows.
flame, in a room with
Yeah.
no windows, coming to your nearest Barnes and Noble. That was the last question. I don't see any further questions. We have enamored you with our knowledge and prowess, apparently. We'll leave you with that. I'm going to cycle back to the accelerator program stuff in case you want to be a part of that. We are actively growing that community. We hope you'll participate with us. We also hope that you gain something from looking at a new hire all the way through to a senior trader and all the issues you have to deal with, the growing pains. This is I'm going to tell you, there is no secret here. It's a process. It is an ongoing it's growth, right? It's like watching a human being go through the motions of learning about life. That's what trading is. So be patient with yourself, be forgiving with yourself, but follow a plan. Don't jump from one thing to the next to the next. Write down what works for you. Wait for the market to show it to you. Trade it consistently and then measure those results by journaling them, by using something like the Convergent Trade Analyzer to track the performance on it, and so on and so forth. Because at the end of the day, money is made through following a process that you do with confidence. That's where you're getting paid, and that process has to align with the market. I'll leave you with that. Our time is up. John, any last words?
No, it was a pleasure as always. Got some good questions. It's great to see some folks from the AP group, and hopefully see some new folks in the community. So great session. Good stuff. Thanks,
Very
everyone.
cool. Thank you all for joining us. We will catch you online soon. Okay, take care. Cheers.
Ciao.